So everything crashed. What happened? Well, is this the beginning of the bear market? We're gonna check three different scenarios for that. So this is the first scenario where we are counting this as an A, W, X, A, B, C to a Y finished. And then this is a finished wave B. And now we're looking for a wave C. So this count enables us to count this move down as impulsive. So we are counting this as either 1 2 1 2 1 2 1 2 or 1 2 1 2 1 2. There's one less 1 2 here in my count. So that's not really important. That's more of the later stages if we get 4 5 4 5 4 5 and so on, where this matters if it's a one more 1 2 or not. But this is enabling us to count this as an impulse down. And an impulse down meaning that in wave 2, here 1, 2, 3, 4, you don't want wave 4 here to touch the 61.8. So taken here from this. So we don't want to touch this if we are a bear, because that's a very uncommon target for a wave 4 here. Other than that, we are looking for more downside, but since this is counted as A, B, C, it's a correction. And if it's a correction, it is correcting something, and then we are looking for higher prices, as we have discussed in earlier videos. So this is a corrective structure, not an impulsive. So it's not the beginning of the bear market. And also we have this scenario where we are counting this as a zigzag W, X, and then you can ask yourself, well, isn't it possible to count this as a double zigzag? Well, a double zigzag has very low probability if we hit the 0.70 fib. And you can see that we clearly did hit that. So this scenario isn't looking for a double zigzag. Instead, this scenario is looking for either a flat or a triangle, because in a sideways WXY, Y cannot be a zigzag. It can only be a zigzag. It can only be a flat or a triangle. So if it is a flat, then we can count this as an A, B, C. So here we have also a few not finished wave 2s. You could argue that if this is wave A, it's like A, B, or W, X, Y, and then you have just a few less 1 2s downs, so to speak, to finish wave C a bit earlier than this count. But as I mentioned before, it's just a matter of a few different 1 2s not playing out. But the directional bias is still the same. This is looking for finishing a wave C, or a wave Y in this matter, in a bigger correction. So if it is a flat ABC, we are looking for ABC upwards, a three-wave movement, either to take out the all-time high, because that's the most probable scenario, because an expanded flat is more common than a regular flat, or we are getting very close here and then we get a wave C down. Or in a triangle, which has a lower probability, we are looking for A, B, C, D, E in a triangle shape like this. So Y will finish like around here somewhere. But that is a bit early to talk about. So now we are just waiting for confirmation. Basically, we want wave 4 to be hit for a 61.8 to invalidate an impulse, meaning that we want to count this as a finished wave C soon. So yeah, is it possible that this is the start of the bear market, that this is the high? Well, if we take a look at Bitcoin here on a 1-day chart, a lot of analysts have had this count where we have a diagonal, a leading diagonal or an ending diagonal. A lot of people said it was an ending diagonal and that this was impulse wave down, and then we are looking for bear market. But we didn't get that because that was not really the most probable scenario. So we can't count it like this because we took out the high. It only is possible to count like this, and we get this ABC kind of structure, WXY in a triangle. So this is just a not a deep correction. So, well, can you move wave 5 over here? Well, we can take a look. So if we do that and we put wave 4 here, and then we put wave 3 here, because you can't have a flat in a diagonal. It needs to be a zigzag family structure. So, all right, if we assume that this is the end of the bull market, can we finish here according to the rules? Well, what kind of a diagonal are we talking about here? You can't really tell if it's a contracting or expanding diagonal. So if we take a diagonal tool here and just pull it here from 1 to 3, and then we can shake 4 to 2, you can see it's ever so slightly that this diagonal tool is moving like inwards, which means that these lines are expanding. And if these lines are expanding, then wave 5 needs to be longer than wave 3. So we need to check. No, it's not longer than wave 3. So that's not a valid count for a diagonal. So if we were to count this as a diagonal, we now need to put wave 4 over here and wait for wave 5. Now you can see it's more clearly expanding. Now we need to wait for wave 5 to reach above 100% of wave 3. So that is the proper count if we were to count it as a diagonal. Otherwise, there's no real way to count this as a finished. You can't really finish the bull market over here in a diagonal. And you can't really finish it either with an impulse, because how are you gonna count it? Like 1, 2, 3, 4, 5. Well, we got the high here. So yeah, you can't really count it as the highest probability scenario that we are finished here with the bull market. So we are still looking for more upside, and then these scenarios are likely. These are the highest probability. But as we noticed yesterday, sometime the improbable scenarios plays out, which I have mentioned in the videos, that it was a very unlikely scenario that the move down was impulsive. But still it happened, and sudden events, basically, where it was mentioned that the tariffs for China was increased by 100%, and all the stock market and everything just fell down. So sometimes Elliott waves take the least probable scenario, and you gotta take that into account. So, and it's very important to know where you are wrong. So if you were in a long over here, like I was, I got out when I saw the sign that wave 4 hit over 61.8 in my small scenario, or I was in a long. Let's see, I was in a long. Here I was in a long. So I took it up here, and then this moved down on a very low time frame to hit the 61.8 for a invalidation of wave 4. So then I was like, okay, so this is not an impulse up, this is a correction. So I got out, I had a small profit, and then it just moved down. So it's very important to know that if the price is going to take a very improbable scenario route, you need to know where you get out, so you're not end up losing everything, basically. So yeah, so that are pretty much the scenarios we are looking for, and also this this kind of modern art type of thing. These are the channels that you can use to see if a structure is being broken, especially in a corrective structure way. So here you can see that we broke down and got a close below this with a strong candle, and now another structure has been starting here. So if we get a close above this channel with a strong candle, then we can more safely say that this move is over and another is starting. So keep an eye out on that. Yeah, that was it for me. Have a nice day this time.